Hi everyone, I'm Debbie Roberts, owner and financial advisor at Property Apprentice. Join us today for the Week in Review, where I talk about current events for the everyday investor and home buyer. Our topics for this week: topic number one from One News on the 9th of April, average home value sees modest increase for the first quarter. Topic number two from One News on the 11th of April, no cause terminations remind renters they are at the whim of landlords. Topic number three from the NZHerald on the 10th of April, official cash rate, OCR decision, no change, very high threshold needed to justify hike. Topic number four from Newshub on the 10th of April, homeowners using savings to respond to major insurance premium hikes. And fifth topic for this week in review from Corelogic on the 9th of April, normalisation of construction growth rates would benefit builders and consumers. So first up this week from One News on the 9th of April, average home value sees modest increase for the first quarter. The latest quotable value house price report reveals that the average home value in New Zealand saw a modest increase during the first quarter of 2024. The report for March shows a national average home value increase of 2.2% to $924,734, which is 1.9% higher compared to the same period last year and 13.1% below the market peak in late 2021. James Wilson, QV Operations Manager, characterised New Zealand's residential property market as flat, with minimal movement observed nationwide amidst economic challenges. Some urban areas, notably New Plymouth at 2.1%, Palmerston North 0.6%, and Invercargill 0.7%, recorded more growth in this index compared to the previous one. Despite a large number of properties on the market providing options for buyers and exerting downward pressure on prices, Wilson highlighted persistent challenges due to interest rates and credit constraints. The influx of new listings has notably cooled down the market, particularly in Auckland, where home values have stalled recently. Queenstown experienced the most significant growth this quarter at 2.7%, followed closely by Wellington at 2% and Christchurch at 1.5%. The average home value in Queenstown is now 9.9% higher than last year and 46.3% higher than before the COVID-19 pandemic began in New Zealand. In Wellington, the market is dominated by first home buyers, and values across the region are relatively more affordable. Despite recent changes like the reintroduction of 80% interest deductibility for landlords, Wilson maintains that the market remains flat in trajectory. Topic number two from One News on the 11th of April, no cause terminations remind renters they are at the whim of landlords. The Green Party has criticised the government's decision to reintroduce no-cause terminations for periodic tenancies, stating that it perpetuates uncertainty and insecurity amongst renters. Housing Minister Chris Bishop unveiled several changes aimed at renters and landlords, rolling back measures enacted by the previous Labor administration. Bishop argues that the changes are pro-tenant, asserting that existing regulations discourage people from becoming landlords and limit the supply of rental properties, consequently driving up rents. He cited feedback from landlords who were hesitant to take tenants on with less than perfect references or stable employment due to the absence of 90-day no-cause termination as a safety net. In response, Green Party housing spokesperson Tamitha Paul criticised the move, claiming it exacerbates inequalities in favour of landlords and keeps renters in a perpetual state of uncertainty. She emphasised the importance of housing security and criticised the government for favouring landlords over tenants. Paul highlighted concerns about the impact on renters, including frequent moving and disruption to communities and schools for children. She criticised the government ministers, characterising them as serving their own interests rather than prioritising tenants' needs. Despite the criticism, the Auckland Property Investors Association cautiously welcomed the restoration of no-cause terminations, viewing it as a significant development in the rental landscape, but urging caution pending the release of the final legislation details. The proposed changes include reintroducing 90-day no-cause terminations for periodic tenancies, allowing landlords to end tenancies without giving a specific reason. Additionally, notice periods for ending tenancies under certain circumstances, such as landlords moving into the property or selling it, will be reduced to 42 days instead of the current 63 or 90 days. Although the legislation is set to be presented to Parliament next month, the new rules are not expected to take effect until early 2025. So, my opinion on this is that the real truth lies somewhere in the middle between what National is saying and what the Green Party is saying. When we look back at historical data, only 3% of tenancies were ended with that 90-day no cause termination. So, it's a very small percentage. My opinion is that removal of that no cause termination protected the bad tenants and had no significant difference whatsoever on good tenants. So, when we think about the number of things that we've seen in the media recently about people living next door to problematic kind of aura tenants, for example, it's exactly the same as if a private landlord puts in a tenant who goes through a period where things are problematic and they might cause concern for their neighbours. So being able to give them a 90-day no cause termination, like for example, if they move in a boyfriend who's a gang member, you don't want to be going up against that in tenancy tribunal to say that's the reason that you're giving them notice. So being able to give them a 90-day no cause termination just gives you a bit more protection as the owner of that property, and also protect the neighbours and potentially some of your other tenants if you've got multi-income properties, for example. So I think that most tenants are not going to have to be concerned about the reinstatement of this whatsoever. Problematic tenants, be scared, but pull your socks up at the same time. If you'd like to learn more about investing in property, join me at one of our free events called How to Succeed with Property Investing. I'll discuss strategies for successful investing from my perspective as a financial advisor, and these events are available live online or in person. Check out propertyapprentice.co.nz for upcoming dates and register today. We don't sell property, so it's all about increasing your knowledge to reduce your risk. If you've already been to one of our free events and would like to find out more about how we can help you to reach your financial goals, you can also book a no obligation phone call or meeting with my husband, Paul Roberts, via the website. That's propertyapprentice.co.nz. Topic number 3 from the New Zealand Herald on the 10th of April, official cash rate, OCR decision, no change, very high threshold needed to justify hike. The Reserve Bank has opted to maintain the official cash rate, the OCR, at 5.5% in its latest move to combat persistent inflation. This decision aligns with efforts to rein in capacity pressures and bring consumer price inflation back within the target range of 1 to 3% by the end of the year. The bank highlighted that current inflation levels continue to exceed the desired range, necessitating a restrictive monetary policy stance. Despite ongoing inflation concerns, global economic growth remains subdued and below trend, with major central banks remaining cautious about easing monetary policies due to inflation risks. The market response to the cash rate announcement was subdued, with minor movements in the New Zealand dollar and wholesale interest rates, reflecting expectations consistent with previous statements from the Reserve Bank. Economists had anticipated the Reserve Bank to maintain the cash rate given recent economic challenges, including 2 quarters of economic decline leading to a technical recession in late 2023 and another one now. Looking ahead, while short-term inflation is expected to remain elevated, most economists anticipate a future OCR cut, possibly around November, balancing domestic inflation concerns against broader financial stress indicators like declining retail sales and business liquidations. However, there are positive indicators such as increased confidence among small and medium-sized business operators about the economy, suggesting potential resilience in the face of economic challenges. Topic number 4 for this week in review from Newshub on the 10th of April, homeowners are using savings to respond to major insurance premium hikes. Homeowners across New Zealand are grappling with significant increases in insurance premiums, leading many to underinsure their properties, raise their excesses to reduce their monthly premiums, and dip into savings to cope with the soaring costs. Reports indicate that average premium hikes of up to 23% between September 22 and July 2023, with some regions experiencing increases exceeding 30%. Major insurers are also hesitant to provide automatic coverage for properties in high risk earthquake and flood zones, notably in Wellington and Marlborough. The surge in premiums is attributed to climate change driven natural hazards, prompting concerns from experts that these trends are just the beginning of escalating risks. Homeowners have been blindsided by annual premium spikes as high as 60%, prompting adjustments such as reducing insured sums to mitigate costs, albeit at the expense of increased vulnerability in case of severe damage. For example, Julie Harris from Waikanae Beach faced a staggering 58% premium increase, predominantly driven by elevated natural disaster components. Despite lacking clear indications of increased risk from insurers or local councils, homeowners like Julie and her partner have resorted to raising excesses and dipping into savings to manage the elevated financial burden. This predicament has implications for long-term housing plans, particularly for retirees like Julie and her partner. Others, like solo parent Charlie from Lower Hutt, have been similarly caught off guard by substantial premium hikes, leading to difficult decisions to lower insured values and increase excesses. Charlie, balancing a tight budget, has had to forego discretionary spending to accommodate the rising insurance costs. The situation extends beyond individual cases, with homeowners nationwide reporting similar challenges, including difficulty securing automatic insurance and facing steep premium increases despite residing outside marked hazard zones. This predicament underscores broader concerns about affordability and access to insurance as climate change exacerbates natural hazard risks. Experts emphasise the need for regulations to prevent further escalation of insurance costs and prioritise resilience in built environments. Tim Grafton, former Insurance Council Chief Executive, highlighted the urgent need to steer away from unsustainable outcomes by avoiding development in vulnerable areas and enhancing resilience in existing structures to mitigate future risks. Topic number 5, Corelogic on the 9th of April. The growth rate of construction costs in New Zealand has fallen below long-term averages due to a combination of factors, including the completion of a wave of building consents and the resolution of COVID-19 related supply chain disruptions. According to Corelogic's Cordell Construction Cost Index, the CCCI, construction costs rose by only 0.5% in the first quarter of this year, which is less than half the long-term quarterly average of 1.1%. Which is great news that slowdown in building cost inflation. The annual change of 2.3% is significantly lower than the peak of 10.4% recorded in quarter 4 22 and marks the lowest rate in nearly 8 years. Kelvin Davidson, Chief Property Economist at Corelogic, explained that construction costs surged in 2022 due to ongoing supply chain issues related to COVID-19 and a boom in construction activity. However, he noted that supply chains have now stabilised and house building activity is moderated, which reduces the pressure on capacity and subsequently lowers cost growth. Davidson emphasised that this normalisation of construction growth rates would benefit builders and consumers alike after a period of unprecedented industry volatility, during which construction costs soared to levels 25% higher than pre-COVID levels. He highlighted that the flatter costs would enable builders to price jobs more accurately, providing consumers with greater confidence that the final price wouldn't escalate significantly during the construction process. While acknowledging that construction costs are not expected to decrease because of this, Davidson predicted an annual growth rate of 3 to 4% for 2024, indicating that the cost to build would not experience further sharp increases. Corelogic's CCCI report tracks and reports on materials and labour costs, providing valuable insights for businesses to make informed decisions, estimate rebuild and insurance quotes, and manage risk effectively. The report specifically measures the rate of change in construction costs within the residential market for a typical standard 3-bedroom, 2-bathroom brick and tile single-storey dwelling. To make property investing work for your situation, it's essential to start by setting clear financial goals and understanding your risk tolerance. If you'd like to learn more, join me at one of our free events called How to Succeed with Property Investing. During these 2-hour workshops, we cover the most recent property market data. And what's more, as an experienced property investor and a financial advisor, I'll be sharing valuable insights and expert tips to help you on your journey. Our free events cater to all levels of property investors and first-home buyers. I'll also tell you more about how we help our clients achieve their financial goals. So if you're interested in finding out more about what we do, visit propertyapprentice.co.nz today to secure your spot and register for one of our upcoming events. Alternatively, book a no-obligation phone call or meeting with my husband, Paul Roberts, through our website. That's propertyapprentice.co.nz. Thanks for listening.